All right, welcome everybody back to my channel, Survive and Thrive. And today I wanted to focus on one of the high growth stocks that everybody knows and loves, and that is Amazon, ticker symbol AMZN. Jumping right into this first article in the NASDAQ, next wave of growth might surprisingly be in brick and mortar operations. And as this states, interestingly enough, what is happening to Amazon is that they are somewhat transitioning from an e-commerce store and being able to develop over time into more of brick and mortar operations. And this is actually a decent good news aspect for them, especially given the latest antitrust legislation. While not the first venture outside of the online market, Amazon Go Store, Whole Foods acquisition, Amazon's plan to open its first physical clothing store sounds like it's the next step in their expansion. And I did not know this until I read this article. According to Wells Fargo, Amazon surpassed Walmart as the largest clothing retailer in the US, with US $41 billion in clothing and shoe sales. That is absolutely an amazing statistic. And especially when you know that Walmart has been one of those retailers at the top of the list in the Fortune 500 company, and as of 2021 had $524 billion in revenue. To have Amazon actually competing with a company like that is a very big deal. I do have holdings in Amazon. I bought in around March, April of last year. And since then, the stock price has at times more than almost doubled. And so it was a very good value investment for me in a high growth company. Now I know this is a very expensive company to invest in if you don't have holdings or haven't been a part of them for some time, the last 5 to 7 years. And so one opportunity or approach for you to get into this company is through fractional shares. And this was, interestingly enough, a place where I started with E-Trade, which at that time was called Share Builder. This was 13, 14 years ago. And they kind of did away with that over the number of acquisitions as they were kept getting bought out through Capital One, eventually E-Trade. And now it's come full circle where they have these companies such as M1 Finance. And I have done coverage videos on that company. If you want to learn more about them, definitely check out this video. I will also try to list in the description a referral code if you do end up opening an account. And it just gives you a way to dollar cost average week to week and be able to invest in some of these companies that cost a lot of money per share, but you can still benefit from their high growth even if you can't afford to buy full shares at their current price. The company plans to leverage its technology to streamline the experience, blending the online and offline shopping experience. The first store should open in Glendale, California later this year. And they touch more here on the approved antitrust legislation that forbids the most prominent tech platforms from favoring their own products and services over competitors. Senator Chuck Grassley, Republican from Iowa, reflected on the bill, saying that its goal is to prevent conduct that stifles competition and not break up big tech. You can see here, just like most companies in the stock market, the first quarter of 2022 has been very rough. The first 3 weeks, Amazon declined 16%, leading a correction in the NASDAQ. Yet, as the earnings approach, some institutions place their faith in the mega cap stocks to reverse the situation. I could see where these large FANG stocks take a big hit, and that becomes a buy opportunity for investors to load up on more shares. And like this is stating, it could help to create somewhat of an upward catalyst. But I still think that later into 2022, we're going to still see a lot of volatility, given that there's a number of rate hikes that are going to happen with interest. And that's going to continue to create some fear and doubt as well as concern for investors. And they will definitely sell the news, especially if there's any other catalysts or negative outlooks that come at those times. We also know that Amazon has their AWS or Amazon Web Service. Such an occurrence wouldn't be the first, as AWS came to the rescue in the last quarter, exceeding the expectations by $630 million. So that will continue to develop on the technology side for them, and I don't see that going away. And I'll go over the history of this share price, but you can see that this company really is fairly stable, even in the times when we have these black swan events. And so definitely take your time to do the research and understand what this company is about. I think everybody fairly well understands what they're about, but you want to make sure that you're doing everything you can to understand what a good entry point is, when you should buy in, and where this company potentially could be headed. At such a high per share rate, I could see that there could be a stock split at some point in time. It's not very common for Amazon to do these stock splits. If you look at their history, it hasn't happened very often. But I could see, based on where they're at and potential for them to bring in new investors, build more capital and revenue for the plans that they want for expansion, as well as potentially adding a dividend option, which would even increase more investors, would be a way for them to really catapult and build some momentum off an already high-performing, high-growth company. If we examine the Amazon's returns, Warren Buffett described how share prices do not always rationally reflect the value of a business. One way to examine how market sentiment has changed over time is to look at the interaction between its share price and its earnings per share, or EPS. Amazon.com achieved compound earnings per share growth of 63% per year during 5 years of share price growth. This EPS growth is higher than the 28% average annual increase in the share price. So it seems that the market's enthusiasm is lagging. And having said that, the market is still optimistic, given the PE ratio of 55.09. And you can see this quick little visual showing the EPS and analyst EPS range, as well as how it's performed here over time. And even though shareholders are down 16% for the year, remember that even the best stocks will sometimes underperform the market over a 12-month average. On the bright side, long-term shareholders have made money with a gain of 28% per year over half a decade. So very impressive, and I think that they will continue to diversify, expand, perform, and come in with good numbers. And like I said, let's take a look at their price history, but you will see that they are fairly stable to be able to ride out even those times in volatility when the market is down. If we look at this article in CNBC, Amazon stock just had its worst week since 2018, and they closed out their worst week in 4 years with shares falling 12% for the week. Prior to the Friday's close, Amazon's worst week was December 21st, 2018. So this hasn't happened in a number of years. But like I said, this could be your opportunity to be able to buy in dollar cost average. Even if you can't afford a whole share, you could at least start to buy fractions and continue to build on that week to week, month to month, or whatever frequency you can to start to build your holdings and investment opportunity in this company. Within that 1 week performance being the worst, the shares fell 13.4%. That's quite the correction. Seems like a decent opportunity for somebody to buy in if they really want to. For me personally, it gives me a chance to dollar cost average and continue to buy this and get more of the shares for the price that I'm paying. As it states, investors are increasingly nervous the Federal Reserve will have to raise interest rates several times this year to tackle high inflation. And I think everybody saw Netflix got absolutely hammered when they came in with disappointing subscriber results in their last earnings report. And this sent its shares plunging almost 22% as of Friday. Now, as it states, and I'll cover this in a little bit more detail in the next article, Amazon is actually scheduled to report results for the fourth quarter on February 3rd. So that's going to be the one to watch out for. It's going to be a date that you're going to want to mark on your calendar, especially if you have any interest in this company, whether that be that you have holdings or want to jump in. And this could be yet another catalyst that could either go in the downward direction, which I think is more than likely, or create some upward momentum depending on what the results are. Motley Fool covered the Amazon's earnings report that we talked about on February 3rd. The key points: Wall Street expects Q4 revenue to rise 9.7% year over year. Analysts also project earnings per share to drop 73%. Wow, I mean, absolutely crazy to see. And the results were almost surely hurt by global supply chain issues. AMZN is slated to report its fourth quarter and full year 2021 results after the market close on Thursday, February 3rd. An analyst conference call is scheduled for the same day at 5:30 Eastern Time. The period to be reported on is the second quarter that Andy Jassy has been CEO of the e-commerce and technology giant. So Andy is the one who took over with Jeff Bezos stepping down from that role. And it will be interesting to see what the results are. Like I said, I think that there is more than likely a chance that there will be a downward catalyst or turn in the per share price. But that is just in the short term. I think that looking ahead in the years to come, Amazon will continue to outperform. Investors will probably be approaching Amazon's report with some apprehension. Last quarter, the company missed Wall Street's expectations for both revenue and earnings, with the bottom line miss a sizable one. That was the second consecutive quarter that revenue fell short of the analyst consensus estimate. In 2022, Amazon stock has declined 9.1% through January 20th. Naturally, this isn't the kind of absolute performance investors want to see, but shares are performing roughly in line with the market. The S&P 500 and the tech-heavy NASDAQ Composite, which is arguably the better comparable for Amazon, are down 5.9% and 9.5% respectively over that same period. Here's what to watch in Amazon's upcoming report. So you can see the metrics here: revenue, earnings per share, and being able to see how that compares in the Q4 2020, along with guidance that's been provided by Amazon, Wall Street's estimates and predictions in terms of dollar amount and percentages. While Amazon doesn't provide guidance for earnings, it does so for operating income. Management expects fourth quarter operating income to range from 0 to $3 billion, compared with $6.9 billion in the year ago period. The guidance range represents operating income declining by about 100% to 57% year over year. The e-commerce leader faced tough year-over-year comparables in the fourth quarter. In the year-ago period, revenue surged 44% and earnings per share soared 118% year-over-year. The fourth quarter of 2020 was particularly strong for two main reasons. First, the pandemic was raging and vaccines had only begun to roll out at a very tail end of that quarter or year. Second, Amazon held its annual Prime Day event in the fourth quarter of 2020, October, whereas in 2021, this event took place in the second quarter, which was June. In last quarter's earnings release, Jassy provided another reason: increased cost, that the company's bottom line results are expected to decline significantly from the year ago period. For context, in the third quarter, Amazon's revenue increased 15% year over year to $110.8 billion, missing the $111.6 billion the street had expected, but coming in close to the high end of its guidance range of $106 billion to $112 billion. By segment, sales in North America, International, and Amazon Web Services rose 10%, 16%, and 39% respectively. EPS dropped 51% to $6.12. That result fell considerably short of the analyst consensus estimate of $8.92. So it will be very interesting to see February 3rd, mark that date, check out what happens in that report and what news comes out of that. It could be one of those sell the news type catalysts. And if that happens, that will be a great time to buy in, especially if you believe in this company and have faith that in the long term they will perform. It's a very strong company. I continue to keep the faith. I will continue to build on my holdings that I already have, especially when we find these opportunities to buy. Lastly, in this article, first quarter 2022 guidance. Amazon provides guidance for revenue, but not earnings, as we stated before. However, its outlook for operating income often gives investors a ballpark idea as to what year-over-year percentage change the company expects on the bottom line. For the first quarter of 2022, analysts are currently modeling for Amazon's revenue to increase about 12% year-over-year to $121.2 billion and EPS to fall 33% to $10.53. This is one of those companies that do your own research, find out more about what their business plans are moving forward, growth and expansion, and see if it's one that you want to invest in today. All right, so lastly, like I talked about, I just wanted to touch here quickly on the stock price history. You can see in the last month, almost $3,400 per share, dropping down to, as you can see, $2,852 per share. That's a 16% drop, significant decline, and a great time for you to be able to add more or jump in at an entry point. That's all I really wanted to cover today, and I am around 140 subscribers as of today. I really want to get to that next milestone, the 250 subscribers, 500, eventually 1,000. I really want to have that happen this year, and I appreciate everybody who continues to join me on this investment journey and being able to find that path to financial freedom. So make it a great week. Enjoy these times when you have those opportunities to really build up your investment portfolio for substantial gains in the future. Don't just survive, thrive.